Hello, everyone, and welcome to this webinar. I hope you guys have a good time so far. So, investing webinar, global market insights, and as usual, let's start with the risk disclaimer. Simply states that this content is for general information only, and it is only for education material, and it's not indicates to give or provide any personal or financial advice for any investment to anyone. Thank you for understanding this. For new participants that we haven't had the chance to meet yet in another webinar, so allow me to introduce myself. My name is Theo. I'm trading and investing for about 12 years so far. I'm a certified financial market technician. My highest education, it's a master's in physics. When it comes to investing, I prefer the long-term approach. And I like to watch some tech stocks, automotive stocks, and also cryptocurrencies for investing. Here at Admirals, I'm an investing and trading educator and analyst, of course, and I also do coaching. Now, about Admirals, few words about our broker. Maybe you didn't have the opportunity to search on the website. So we are a Forex and CFD broker. We offer more than 8,000 instruments for you to choose. We have support across many different countries in different languages, and we hold license from very good reputed organizations like under Cyprus, the CISEC, under the UK, the FCA, in Estonia, the EFSA, and in Australia, the under ASIC, in Canada, in Africa, and many, many, many more. And when it comes to trading, we try to keep the spreads as minimum as possible. And of course, when it comes to investing, we try to keep all the fees to the minimal, so it's make your investment journey much, much easier. So exciting news for you guys. The Arm IPO is live, it's real. And for those who don't know what this IPO is about, let's just read very brief about this company. Arms Holdings, it's the official name. And the company was founded in 1990, headquarters in Cambridge, United Kingdom. Arm's 2022 revenue was $3.7 billion. The potential valuation is between 30 to 70 billion. Approximately, it employs about 6 to 7,000 currently, and the IPO date set it for less than a week ago, and it's planned, of course, to be listed on NASDAQ. Now, this the source of this information. Also, if you visit admiralsmarket.com, you will find it on the news information in more detail, actually, so you can have a look there. Guys, if you have any questions, please feel free to use the chat box. You can reply in this webinar chat section. Now, how to invest in the Arm IPO with Admirals? That's a question. So, okay, Theo, that's good. If we decided to act, what's the next step? So, you can use the MetaTrader platform. You can download it on your desktop or laptop or mobile application, and you can open an investment account if you don't have an investment account. Also, you can directly download our mobile application and you can search for ARM when it's going to be listed to purchase if that's appropriate for you. And of course, I would like to show you guys a little bit more about what happened the last in a 3 months relative performance. We can see these sectors here. Here is the energy sector, as you can see, and excuse me, based on the last 3 months, this sector was outperforming all the others. Here, almost 12% up. Communication services as well as financial, they were pretty much around the same mark, +4. Healthcare was in minus. Every time we go through, we have to change the color, right? Real estate was much more worse than the healthcare. But the last one, as you can see, for the relative performance, the weakest, let's say, was the technology sector. Okay, now I prepare a few slides just to discuss about them and also share another useful information with you. So, as we all know, or as many of you guys notice, recently the Apple Inc. released the new iPhones, the models iPhones 15. Okay, I put here the weekly chart. Now, is it necessary for an investor to read charts? And the answer is depends on the investor. If there are investors, they want to buy low and sell high, then the answer is probably yes. We have to at the least have a look at the charts, and the easiest way is to look at the past, and when we see price drop, we just buy, as I explained you in other webinars. Now, you can see here, that was 2021. So here is the duration, 2021, from here to there. And then up to here, that's the 2022. And from here onwards, up to today, that's 2023. So we see that the stock price in 2021 had an upward direction. And here is the volume indicator, which shows pretty much if the price move supported by a healthy increase in volume. Because in investing, there is something we say that if the price moves upwards, but in less volume, it means there are less market participants that pushes the price to the upside. It's a sign of weakness on the price, and we do expect at some point to see the price decline, and we say that okay, maybe it's going to be a good buying opportunity, let's say, when the price moves lower, because it makes the stock cheaper, right? So in 2022, the price was mainly moving around these levels, $130 per share. Okay, now for people they read charts a little bit more advanced, they will have spot this price level based on some technical insights that there will be a good areas to buy. Now, since January 2023, Apple share moves higher and higher and higher, registering a higher price compared to the last 2 years. But what's the significance with that? For me, as a technical analyst, I spot that there is a decline in the volume. Here is, to make it more, let's change the color then. Let's use this one. So you see, guys, it was around 110 millions at this point here, when the price was around $155, and price now is it went as high as $195, but the volume was let's say just a little bit to 110 million, as you can see from the left. So you see that, yeah, the price rises, but in a decline volume, and that's a sign of weakness. So we would expect it to see the price dropping at some point, right? Now, there is something interesting in this market. All these red candles, they show that the price is weakened. And last week, we ended up here last week. And it was the week that Apple reported the earnings. Now, Apple released the new iPhones. Now, how is possible, many investors are wondering, how is possible when a company, such a big company such as the Apple or Samsung or any other company that make these devices, they release a brand new model device in the market, and the price, instead of spikes, it just moves. It just moves lower, because this is not what caused the price to move. And that's where I'll try to give you some insights of how the price and the shares, they are moving in general. The fact that they released the new iPhones and we spotted some weakness in the market, it came from the fact that all these months the price was rising in a weak volume. That's the whole point. So it's like it's losing momentum. And this new event that came in the market, it will help the price to move lower at a level that the buyers, they will feel more confident to buy low and sell high. So we do expect to see some decline in the price. Maybe it's going to stop here. If not, it's not going to stop around $170 per share. I could give it as around 160. I could see this area as a possible area that buyers, they can pick it up, because there are few technical levels of confluence. And that's pretty much, that's how the price moves in the shares price moves. Price, it always, after some rally, it needs to push lower, because some people, they were buying from here and here, and they were heavy loaded with a share. Now they feel that it's a good time to take some profits. It's not only buying, it's also selling for profits. And we could see that it's going to be a move towards this area of possible zone of possible demand, zone of demand. Next, the Adobe. I believe we are all familiar with the Adobe Inc. And we see that since 2023, the price of this share, it was somewhere around $340, somewhere here. And now, as you can see, it's about $528 per share. But again, the price since in the middle of June, it spiked with this volume right here. And since then, guess what? Price made a new high statement and the volume didn't support the move. So the decline is expected, and if the price moves below this area, we would expect to come somewhere here. And when we explained in earlier webinars about the accumulation strategy, many investors we follow, it's that and that's also lead to dollar average cost. Price makes a dip and we try to buy something in this market. If price moves a little bit lower, we try to buy something more. Price moves lower, we try to buy something more. So it gives us the opportunity to buy at lower prices. Now, I see many investors, they make, I'm not going to say it's a mistake, because in investing there is not right and wrong thing. So I couldn't use that word. But again, knowing what you know now, you could just look at the charts and see, is price full on green? So better I wait to see some red marks. That means price is going to fall a little bit, and then I buy. Without knowing anything about analysis, without knowing anything about all these lines, they are here unless you know. And yeah, that will help a lot to at least buy when there is some weakness on the price. Do you guys agree? So in other words, we buy cheap and we sell when price rises. The last 3 months, the energy sector was outperforming, as we explained earlier, and that was plus 11.85, and that's compared to the previous 3 months. Okay, and I prepared 2 slides for you regarding this. Adam Resources and Energy Inc. It's, of course, in the energy sector, oil and gas refining and marketing, USA Amex. All right, so what's the deal with this one? You see that in 2023, middle of February, this stock was pricing at $60, something more, okay, $60 per share. So some investors may be using the technique I just explained you by just looking this simple thing here, waiting to see some red dots on the charts. We call them candlesticks. So they could buy maybe at $58 some shares. Then they see a little bit more decline. Okay, 54, good price maybe to buy. Some more decline, 49, some more decline. Now price, it's somewhere about 35, between 35 and $36. Okay, if this it's going to end up with a push to the upside, we don't know what's going to happen, but I'm saying if it's going to end up like this, then For the investors they bought right here, they do expect the price to make at least a rally back to this all-time high back this 2023 high, let's say, and to profit by almost double. And this one here, it's the Atlas Energy Solution Inc. Again, on the New York Stock Exchange, listed in the US, oil and gas equipment and services, not refining and marketing. And we see on this chart that the market, that's since 2023 March, okay? So the price was somewhere around $15, $16, and it jumped, time we speak, around $23. Okay, so people and investors who believe that the market here was offering at a good price, and they bought it low. They do their calculations and they are maybe selling off for some profits. But someone, for example, like myself, that I just turned into this chart, let's say, and I just spotted this area here. If after I do my my homework and look at some of all the things we spoke on previous webinars, like P&L of the profits, like earnings, sales reports, and all this stuff, and we may think that, okay, it's an interesting share and maybe I would like to buy it. I see a little bit of weakness on the price, so I maybe buy something here. I'll say, okay, if price will drop somewhere to $21, I may buy a little bit more. If price drop a little bit and a little bit, I will may add to my positions and waiting for the next wave of the price to move upward. Okay, now again, as I said, we always do, we read our reports, we read whatever it's, we believe it's relevant for us to help us in this analysis and to understand better the market. But again, starting from, starting by maybe looking at the charts and try to understand what's overvalued, what's undervalued, to help us beginning with something, it's also considered as beneficial for investors. Other investors, they go the opposite way. They start looking at the financial statements and profit ratios and sales and growth and quarterly and yearly performance. And then they turn to the technical to find accurate spots to buy the share. Okay, either way, however, every investor feels it's more appropriate for them. I would like to show you a website here that you can use it as well if you guys want. Here is Kathy's ARK, or the funds, and you can see how she's having under management billions and billions of dollars. Okay, and for example, in this ARKK fund, you can see the holdings. They have 31 holdings. I can share the link with you if you want, or you can take it from here. So, for example, she's holding Tesla Inc. up. So here are the shares. Sorry for this. There are ads popping up. So the shares with the blue line, you can see that's 2022, and here is the current day, 2023. You can see here that the price showing with the gold color, while the price was pushing lower. She was a little bit stable on the position, but we see here that once the price bottomed quite well, as we can see from the price charts, because technical analysis we call it double bottom, and that's the beauty of if you put some effort to learn how to read the chart, just the lines, it's very simple. You can learn it in 20 minutes. I mean, it's nothing. I can show you how to do that. There is a good spot, turning spot, and fast turning spot. Okay, so at this point here, where the price of Tesla was around $110, and that was on May 1st, she start heavily accumulated shares. You see 3.5 million shares all the way to 4 million shares. And once the price, you see here, once the price start rally to 220, 225, 240, 250, 260, she start offloading the shares. So that's what smart investors do. They buy gradually as price declines. You see price declines and she's buying. Price declines and she buys a little bit more. And price dips with this double bottom and she buys quite significant. Okay, price it rallies a little bit, she still buys, and at some point here, price rallies even more and she start offloading the shares. So that's a powerful technique. And again, it doesn't mean that it's only applicable for traders with millions and billions on investment accounts. It's also applicable for every single investor with as much money as they want to invest. So, and here, if we scroll down, we can see on each day how much they are selling, amount of shares, and all this information. And if we take, for example, another one, Shopify. So look at this. Price dips here. From this area to this area, price dips, and she goes, excuse me, guys. In this dip here, you can see the date on the label, 19/8/2020. I think it's August, and the price, the share she accumulated from 2.5 million to 8.2 million. So price moves a little bit higher and she starts offloading. Price moves higher, even higher, and guess what? Offload. And now it's offloading shares. Price rallies, but ARKK is getting out of the major positions, as we see here. And this is going on and on and on. We're going to talk about this in more detail, and we're going to go through some statements and some other analysis here on the next webinars. I think that's all from me today, guys, for this webinar here. Please make sure you attend if you are interested in trading our live trading webinars. I do every single Monday. You can register from the same section you register for this webinar. You're going to see it on the next label. We post weekly fundamental analysis under the podcast section, where you're more welcome to listen to them and learn about the markets more. If you have any questions, you feel free to contact us on all social media or send us an email at global@admiralmarkets.com. So saying that, I would like to say a big thank you to everyone for your participation. I hope you gain a lot of value, and I look forward to see you on the next webinar the upcoming Monday. Thank you so much.